to the Northwest London Property Show. I'm delighted you've joined us today. We've got some fantastic guests in the studio, and I won't spend any time explaining it all to you until we go to the boss, and he'll do that. We'll make him work today. Peter Martin, Unique Letting Agency. Peter, you're very welcome onto the show today. The Northwest London Property Show. Tell us why you call it the Northwest Property Show.
Thank you. Well, I've been operating in the private residential property sector, funnily enough, in Northwest London for about the last 25 years or so. So this is our field of expertise and what we know about. So we wanted to sort of elaborate on our marketplace and be specific about what we do and where we do it.
Well, excellent. Well, you are the boss, the big jefe, as we call them in Spain, of the company, and you've invited guests in to join you today to keep us au fait of what's happening in the renting market and how you can get involved in getting a nice property around Northwest London. So, Peter, let's introduce your guests.
Thank you very much. We have Ellie Cosiner and Harry Gladstone. They'll shortly tell us a little bit about themselves and their companies and what they do. But I thought we could move over to our first guest, Ellie, and kick it off from there.
We'll leave it up to you, Peter, to put the questions to Ellie. Ellie, you're very welcome.
Ellie, hi. Tell us a little bit about yourself, your operation, your company, and what you're up to.
Okay. Hi, everybody. So I'm Ellie Cosiner. My company is Harford Financial. I've been in the financial services world for the last 19 years. And what I'm doing now is, at the moment, supporting clients with questions on mortgages and insurance. My expertise lies in the world of lending and insurance. So that's helping clients with residential properties, investment properties, and commercial properties as well. And then giving advice when it comes to things like life insurance, critical illness, whether it's for families, whether it's for businesses. And at the moment, we're just giving a lot of support to all of our clients when it comes to things like payment holidays, what to do, how to protect themselves, and just to give them a lot of support in that respect.
Thank you very much, Ellie. I know that you've, over the years, and you do a tremendous amount of work in the mortgage industry and gaining loans for property owners. And I thought, given the circumstances and the situation that we all find ourselves in at the moment, you could tell us a little bit about what's going on, particularly in the mortgage industry, and then perhaps elaborate a little bit on what's going on in the financial sort of sector as a whole. So perhaps you could tell us, we're all hearing this term a tremendous amount, mortgage holiday. What is it? What is this? What does it actually mean, please?
In short, it's a break from making your payments. Obviously, everyone is committed to paying their mortgage every single month via direct debit. And at the moment, with people having either lost their jobs or possibly being furloughed, or even not at all, but they're just in financial difficulties, the banks or the government have brought in this new rule where banks are allowed to offer a 3-month payment holiday. So essentially, it's a way that you don't have to make your monthly payments each month for a period of for up to 3 months.
Okay, interesting. So who qualifies for this, Ellie? I mean, obviously in the sector, you'll have private buy-to-let landlords, and you'll also have companies. Is everyone eligible for this benefit?
So the lenders have been learning as they go along. It started off where it was just for residential homeowners, but it has been extended onto buy-to-let property landlords and also for company landlords as well. And effectively, every lender has created new systems to enable them to offer this 3-month payment holiday. So it's across the board, residential and for buy-to-let, and for buy-to-let is both for individuals and for companies.
Okay, that's interesting. So in essence, you get a break. So the person that has the loan has a break from their repayments for 3 months. But what happens to those missing repayments that they would ordinarily have made?
Good question. Clearly, the banks are not just going to say you can have the holiday and that's it. You're going to have to make those repayments because you've got a total balance that you've got to repay back to the bank. So the money that you haven't paid for those 3 months will be added onto the back of your mortgage. As such, your future monthly mortgage payments will be slightly higher because your total balance of your mortgage has gone up and you haven't paid interest for that 3-month period. So therefore, whilst you haven't paid it now, you will still end up paying for those 3 months, but it just gives you that break whilst we're going through this turbulent time.
And would it affect someone's credit rating if they were to take up one of these mortgage holidays?
Good question. So when this first came out, everyone was very skeptical, be it myself, any broker, even any individual who owns a property. The concerns are, if you don't make your payments, how will it affect your credit rating going forward? The banks, or the government have said, and therefore the banks have followed suit to say that it will not affect your credit rating. And that's the general rule. But yeah, one would hope that the banks do exactly as they said they've done. They said it will not affect anyone's credit rating. I guess it could cause possible implications, possible problems when people go ahead and apply for finance in the future. But as long as it's when they can see that period of time, they've asked for a 3-month payment holiday, it should not affect them going forward.
Okay, well, I guess after all, we're all in unknown territory at the moment.
Can I just ask you one question here? We here in Spain have something similar through the coronavirus. Of course, we've locked in. The thing is, but we don't have what I see that you have. We have mortgage breaks, or mortgage holiday, as you call it, a very interesting name. But we don't have anything on rent down here. It's up to the individuals to go to the landlord and say to the landlord, look, it's obvious that we are not earning at the moment, and therefore we're paying rent of, say, 1,000 a month. We can probably manage 600 euros a month. Is that something that's going on there? Is everybody totally blanket and allowed this rent-free holiday?
Perhaps I could be allowed to answer that one with your permission, Ellie.
Sure.
So obviously, as I previously mentioned, I'm in the lettings business, and we collect a lot of rents, and we act for a good amount of landlords. So we've experienced this. It's made it a little bit more difficult where the powers that be have chosen the word holiday, because holiday generally represents a clean break and a holiday. There is no specific legislation. If a rent is payable under a tenancy, that is the rent. There's nothing has been brought into the forefront now to make it mandatory that a landlord allows a tenant to deviate from the rent that is due. However, we're all in this together. We're all experiencing a very difficult time, perhaps in different ways. And it has been very much encouraged by the government and governing bodies within the property industry that landlords and tenants sit down and have a sensible discussion and see if something can be worked out. It has been made perfectly clear that there is no holiday, but there can potentially, subject to negotiation, be an opportunity to have a deferment. A little bit like how it works with the mortgage holidays.
Yeah.
A borrower is not being let off the interest, he's being allowed to defer it. And what Ellie has told us the banks are doing is they're putting it on the back of the loan. And this is what's been happening.
Peter, just getting back to you again, and interesting, it happened to a friend of mine here who, on the renting side, he also went to his landlord. He has a deposit down with the landlord, let's say of £2,000 or £3,000. And the landlord agreed on the grounds that he would take 1,000 a month out of his deposit towards. So let's say he's paying 1,600 a month rent. He said, all I can afford now is 600. He said, fine, but I'll take 1,000 a month out of the deposit. Would that work in UK as well?
Yeah, I mean, that's very, very sensible. And funnily enough, I did the same thing with someone this morning. They approached us a few days ago. And what we this morning agreed to do is they wanted to reduce the rent by £400 a month. And what we've agreed to do is, I've agreed to do that over a 3-month period. And the shortfall, we're going to reduce the deposit and we'll draw against the deposit. And we'll just leave the deposit at a much lower level going forwards. Now, everything's a case-by-case situation. In this case, we were very comfortable doing that because, one, the tenants have been there for 7 years, or perhaps 8 years. And secondly, they look after the property beautifully. And we don't have any concerns about perhaps possible dilapidations. a security deposit on a rental tenancy is for two purposes. One, as surety against non-payment, and secondly, in the event of any dilapidations or damages which exceed fair wear and tear. So listen, as we've established, everything's a negotiation at the moment, and we need to pull together to work through the situation, so we can all come out the other end.
Okay, that's made it very clear. Next guest, Peter.
Harry, thank you very much for joining us. Harry Gladstone, tell us a little bit about yourselves and your company and what you guys do.
Hi, thanks for having me. So I run a company called Complete Accounting Solutions, where we offer end-to-end accounting services for small and growing businesses. So that's everything from bookkeeping to payroll, VAT, annual financial statements, a little bit of personal tax. The idea is that you don't need an in-house bookkeeper. We provide the entire service to you on an outsourced basis.
Okay, thank you very much. And you've been operating for quite some time?
The business has been going for just over 20 years.
Okay, thank you. So, I mean, there's probably quite a bit that you can tell us, because I gather that at the moment the government's committed to offering various financial help and support to businesses in various areas. Harry, can you tell us a little bit about the following and what's being offered in these areas, please? Okay. All I keep reading about and hearing is the word furlough. What is this, please?
So furlough generally means a temporary leave of absence from work, and really wasn't used in the UK until the COVID virus came about. It doesn't change the fundamentals of employment law. It's a tag on for the purposes of this pandemic, where employees can keep people on their payroll, give them no work, and have them paid for by the government effectively. And the idea is that it stops employers terminating employee services, making them redundant, putting them on unpaid gardening leave. It's the government's way of getting money into the hands of the punter so that they can continue to live without putting that burden onto the employer.
Thank you. But this scheme's always been there, hasn't it? But just perhaps not used.
No, it hasn't always been there. This particular scheme, the coronavirus, it's called the Coronavirus Job Retention Scheme, was introduced specifically for this purpose.
Okay. All right. So there's lots of other stuff that I believe is going on. What's happening to statutory sick pay?
So a few years ago, statutory sick pay rules changed in that the employer had to pay the employees their statutory sick pay, but weren't able to claim those costs back from the government. In this particular case, the government has said that anybody that goes off on statutory sick pay because of coronavirus, the employer can claim the cost of that statutory sick pay back from the HMRC against their pay-as-you-earn. So it's a one-off special case around coronavirus.
Okay, what about local authority grants? What's that all about?
There are two types of local authority grants. The one is a small business grant, where anybody receiving small business rates relief on their business rates can get a grant of £10,000 from their local authority. The second is a retail and hospitality and leisure grant, where there's a range between 10 and 25,000, where businesses that fall into that category can get a grant from their local authority. And I've looked at some of the local authority web pages, and they've got quite good information about what the qualifying criteria are and how you go about getting those grants.
Okay, has anything been done with VAT liabilities?
Yes, so there are two types of deferments that the revenue have brought in. One is for VAT and one is for self-assessment payments. So any VAT payment that was due between the 20th of March and the 30th of June 2020 can be deferred up until any time until the 31st of March 2021. So you still have to file your VAT returns. The amount that you owe the taxman doesn't go away. All that he's done is given you time to pay it. So you can pay as and when up to the 31st of March on your VAT to make sure that your liability is paid, and there will be no penalties for doing that. Similarly, on self-assessment, anyone having a personal tax return will have a tax payment due on the 31st of July. There are automatic deferments until January 2021, 31st of January 2021. So for both the VAT and the self-assessment, you don't need to do anything. The deferments are automatic. You can take them or leave them.
Right, Peter, I think we'll take a little break there, a little part one break. We'll be back with part two at the Northwest London Property Show. So stay tuned.